I 100% agree on that because we have it's been back here on the 4 hour here, starting all over. Swing highs, swing lows here. We got all the internals on the 4 hour. Once again, we have a bearish push, swing high, swing low, bearish push with internal inverted head and shoulders inside of this bullish push and a bullish push. Let me grab our green dot here, bullish push there. Let's go down to our 1 hour at a supply zone here. Yeah, with a huge mega candle like that, it's kind of hard to do anything. And we had this huge ugly news candle. So we have our internal structure, which is here. That's our internal. We have Asia lows at this higher low before we push to create the next higher high. This is also internal here, like that. We can target now, knowing that this is a strong internal zone. We can use this as our internal target for our decisional. We know that price is going to eventually come back here to grab liquidity to either then continue to the bullish side or to continue down to the downside to sweep these highs, these daily highs. So you can see these daily dotted lines here. These are our daily targets. If you go here, candlestick target, candlestick target. This is our Asia high or Asia lows, I believe it was on the 1 hour. Yep, Asia lows here. Delete this. My chart doesn't get too chaotic here. Less stuff, the better. All right, I am actually going to let's go to the 15 here and fine tune our supply to probably about there. Okay, yeah, price is already broken our supply. On the 15, can we even have this here? And we have inducement. So we can do this. Holy smokes. What up, Tony? Yeah, also like Shima's ate hell yeah. Did you guys just hear that freaking thunder? Shook my whole house. Yeah, I don't know. This is a tough one. I don't know if you want to do anything with this, honestly. Price has had this huge mega push. We've had the inducement, shift, inducement to the downside, which then considered the consolidation, and then inducement. So get rid of all this drawing. There we go. Once again, grab my marker here. So you can see the inducement here, and we make sure it is the right color. And then we have the inducement to the downside. And then we have the reverse of structure, inducement, and inducement. Right? You can see the two targets of consolidation. Right? Those are our two targets of consolidation. Here's another consolidation point. So we already know that this area is a good target because price has consolidated. But the best target in this area would be either this point here or this point here. And knowing that these 2 points are so close together, ultimately our decisional can be in between this high and this low and at this low. I'm not going to make it this big. I'm going to go in between and hit these section highs, this high and this low. So this is the bullish inducement. This is a bearish inducement. Technically, this is still bullish. I mean, if you're going higher highs, higher lows, yes, this is bearish. But this is our 10-minute or 15-minute swing high, and this is our 15-minute swing low. So ultimately, swing low is down here and swing high is here, and then it creates another boom push consolidation or retraction. That's the three terms: push, consolidation, and then the continuation or whatever it's called. One of you guys might know. So let's go down to our lower time frames. Maybe we'll see a potential setup. At this point, I'm really not interested in this. Session just started. It's kind of ugly. There's no targets, just a lot of upside potential. Boom, 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 retracement, boom, boom. Okay. Maybe we could see a sell off this, but quite frankly, I'm not that interested. Not interested when price on a Monday is just doing this. You know what I mean? See what our other pairs are looking at. Euro and GU are both at a supply zone. Huge supply on the 1 hour. See what the 15. Swing high, swing low. Target would be this here. For we got into sells now, say if we got into sells now, this would be our target, and then this would be ultimately our end target at Asia lows here. Let's go to our 1 minute. Okay, we have inducement here because it created a BOS, creating a supply zone. And then we have an inducement. This is an inducement as well. This is an inducement as well. This is looking like it's going to create an inducement soon. Okay, this is creating an inducement here. Sellers are taking control. I'm not going to count these as inducements. I'm actually just going to count this one and this one as an inducement because this is a consolidation. This is a lower low, 1 leg, 2 leg retest here. We are now in our target zone. I want to see a push, the retest, the push, the retest, and sell into our target. GU. 3 minutes. Let's go back to our euro real quick. Okay, yeah. Consolidation. Here's the bearish push, our inducement on the 3 minute push. Seats low. It's better. Beautiful. See what gold's doing. Yeah, gold is. What do we have for news? Do we have news today? Forgot to look. No news. Oh, Monday. AUD. Okay, we had Powell speaking on Tuesday. Yeah, lots of PMI for euro. Unemployment claims on what Thursday, so that could be a big one, and PMI as well. Thursday could be a big mover. Yeah, good thing it's all before session. So that means we're gonna get a lot of volatility right before session starts, and then it's gonna die down, hopefully, and we should be able to get a nice trade on Thursday. I don't want, like I said, gold is just gone. No, thank you. We might see a euro trade today. This is nice because we have another inducement here. Let me get this drawing out of the way. As you can see, price has then created a nice supply here, which also created the inducement there. Let me draw your dot, which then created the BOS here. So now we have a nice little target, which is also a BOS here. Right. So if we're looking to get into this trade, it would be something like this with a small stop loss, the target are 1 to 3. You do have demand zones or targets here. There's imbalance right there as well. So we're going to do that. Demand zone. This is where we come into risk at this point here. I'm really not interested. Prices then already had a huge pullback dump there. Well, yeah. If price is going to reject this demand, this could create an SMT right here. This could be an SMT here. Potential. So we just got to be careful. And if it's going to reject this demand, it already pulled back too far. It already pulled down a lot farther than I wanted to pull down. And we don't have a confirmed two leg on this because price has to then come all the way back. Let's go to GU. Same thing. Kind of just not the prettiest thing. We have our inducement. Then we have our BOS. And then we have a one leg, which is getting pushed right now. The pullback, the second leg, pullback. Would want to see then pull back to support this zone here. Which then we got to be careful because this could be a target of an SMT. A beautiful tap into this demand. Well, imbalance actually. So if you look, the demand zone is actually right here. And then all of this here is imbalance. So now instead of just doing our supply, we're doing the full thing, taking the imbalance and the demand zone, putting it all into one target. Price is having a nice pullback. Gold still being annoying. Okay, pullback, pullback. I'm not going to take this. Going to be really selective. Both my trading. Quite frankly, not really interested in this trade. Why? Because there's not a two-leg protocol. All this is a potential two-leg, potential BOS retest, potential sell. We're going to follow our trading plan and our trading strategy. And we're not going to take this. So ultimately, I'm not really focused on this. There's a good chance that this does come back, retest this SMT, this supply zone, confirming that this is not an SMT, and then heads to the downside. Low and steady. Let's look back at gold, kind of see if we can just kind of analyze kind of what's going on, even though we're not really interested in this. Like I said, just because of this. This is you see this, you stay away. You're not gonna fight that. That's so much bullish pressure. Just take the day, don't even look at it. But I do want to just kind of use it for studying material. For this example, we can do a little bit of a back test on it. Say, let's zoom out here. Let's see if we can just take our supply zone, just make it the tiniest little thing. Okay, we're gonna do this candle here. I'm pretty sure price is already inside of that. That was a loss from last Monday. Yeah. Okay, so now we know that we have this delegated down to a 15-minute time frame. Let's see if we can go down to our 3 minutes or 1 minute and just kind of poke around, see what we can see. Okay, we have a potential left head, right shoulder. We have no inducement. Buyers are still in control. Why are buyers still in control? Well, first off, look at this freaking huge, huge, huge. But if you wanted to, let me grab our highlighter here. We have, obviously, we have a bearish inducement here, which then makes the lower low here, or not the BOS here. But then price comes back and pushes, creating more inducements as we go. Like this, right? These are all inducements. These are all targets where price came back and then had the push, creating a higher high. Price came back. There's an inducement here as well. Price then pushed, creating the higher high, right? These are all internal inducements, internal bullish pushes showing that buyers are all in control. If you see inducements to the upside, that means buyers are in control. That means you're not looking for sells. Don't look for sells when buyers are in control. You're going to get stopped out. It's bad juju. It's bad luck. That's trading against the trend. That's high risk. And that's gambling. We don't gamble. We take educated guesses. There's a difference. Trust me, I wrote a 6-page essay for my college class about why trading is not gambling. And it's 100% gambling. Just educatedly. Gambling is gambling is for the Vegas. Amen. All right, let's go back to our 1 minute here. And so we're zooming in. So this is gonna be a question for you guys. Actually, I'm gonna call Tommy out here, and I want to see because what he can say. He's one of our newer traders, so we're gonna see if he can confirm what ones are inducement. Okay, so what one? I'm going to mark out a bunch of zones here, and I want Tommy to tell me what one is an inducement. Okay, don't mind my handwriting. Wow, I don't even know how to do a 4 apparently. Um, okay. All right, Tommy, you got me? Type in the chat if what ones are bullish and bearish. Type in our bullish inducements. What one do you think are our bullish inducements, and what one are think of our bearish inducements? Give me a second here. Also, Tony, I want you to throw yours in too. Roman and Dallas, you guys are freaking rock stars. So you can throw them in there, but give the other guys a chance to get in there. Tony's catching on very fast, so he knows what he's doing. Just want to make sure Tommy's caught up to speed. Whoa, this 5 got a little crazy. There we go. Better. All right, Tony, give her a shot. I want to tell is three a bearish inducement? Three is a bearish inducement, but it's not like the best bearish inducement. And I'm going to explain why. So that's a good thing that you pointed that one out because you can see, oh, geez, start over. Price did give us a little shelf there, but ultimately, without counting this shelf, we're going to count basically our swings. So this is our high, and then this is our high. So price didn't have a full shift, right? Price did not have that full shift to give us a bearish inducement. If price would have came down here like this would have been a very strong confirmed bearish inducement. But if you were counting, let me get some of the drawings out of here so we can see a little bit better. If you were counting this as a lower low, our higher high and a higher low, right? And then you saw price broke this structure here, which is a valid shelf. Is it? We'll look left. It is not a valid shelf. This is not a structure point, unless you wanted to count this little baby thing, but I'm not. But if you were counting this, you could be like, okay, yeah, that is a valid bearish inducement because price then shifted below this current shelf here. Yes, exactly, Tony. Exactly. Yep. Four needs to close below this structure to make this a valid inducement. Awesome. So technically on this, there's only two inducements, and the two inducements are bullish. We have the 2 and the 4. Why are these valid inducements? Let me get rid of my funky drawings because you can see price. Let me grab this thing here. Price created the inducements, which then created a valid supply, which then created the higher high and the higher low. Okay. Now that I drew it out, I will mark it out nice and pretty for you. So we have the higher high here. I'll even write it up. Higher high, higher low, higher low, like this. Inducement here, because it created the higher high, had that bullish push, which then also created this supplies or demand zone that has imbalance on top right there. Demand zone, which then created that small little demand zone. And then on a number 4, this is beautiful actually. I just noticed this. Price on number 4 also came back, mitigated, swept the lows of this higher low, grabbed a little bit of liquidity down below, took the imbalance out, took the demand zone out, took the lows out, and then created the bullish push to create the next higher high. And then it used all this liquidity, used all this demand zone liquidity by sweeping these lows, these equal lows here, to then have that bullish push to create the next higher high and the next higher low, which then created this inducement, which is not as pretty as this one. This is a very pretty inducement. This is an ugly inducement, but it is still a bearish structure that pushed and reversed and created a bullish structure. And it wasn't even bearish. It just swept the demand and swept the liquidity down below, which then pushed to create the higher high and the higher low. So on this one, if you wanted to make a supply zone, it would have to be this full candle here. But as you can see, it was mitigated pretty quick, pretty strongly. And that is why you see price here not coming back all the way, because there's no imbalance in this. There's no imbalance. There's no really liquidity underneath. Price does not come all the way back to sweep these lows, then go to the upside. Price then just kind of taps into the prior demand zone, prior imbalance. Remember, but imbalance is the top of the wick to the next candle's wick. So imbalance is here. And as you can see, price tapped into the imbalance, tapped into the demand once again. Yes, it was mitigated by this break of candle grabbing liquidity to the push to the upside, but ultimately it did not shift again, and now it's creating the next higher high. Does that kind of make sense there? Yes, sweet. It is kind of a lot. Um, but like I said, just the more and more we do the repetitions together, the more and more it's just going to get easier and easier and easier. So it's a lot of information. It's like information overload almost. All right. Okay, look at that. Euro came all the way back up into our supply zone. Beautiful having that rejection. So far, we are still bearish. Okay. Or yeah, we're still bearish. These do not count as inducements yet, right? These are not inducements yet. Why? Because our high. These are our inducements. This is our inducement. This is our inducement. Once price breaks above this, there's this. This is now a confirmed SMT. So this is why we stayed away. But also, we're not interested in this trade because there is no two-leg check. There's no confirmation. So this looks like it's gonna be an SMT, but these are not inducements because they did not push above this high and above this high. Basically, we can forget about this one until this one has to get broken first before it can break this one. Yeah, this looks like a confirmed SMT, which means that a smart money trap, which means that there was a bunch of people sitting here like this, waiting to sell. But like I said, it is bearish. We are bearish. But we don't have our entry signal, and our entry signal is our two-leg confirmation. So without having that, there's no way we're even remotely interested in taking this trade. And this looks like it is going to push and flip on us. We do have a one-leg, two-leg confirmation on GU. But ultimately, I'm okay. I think I am okay with not taking a trade today. Um, yeah, because you'd have to. I don't like that this did not pull back far enough, like this. And then, yeah, if this would have pulled back farther, I would have been okay. Because then I would have been looking to get into this pullback around here, even around here, and then the trade would have been like this. And then our break even protocol would have been at this point here. And then we would have targeted our 1 to 3. Or even if yeah, that would have been a break even protocol there probably. And then we would have targeted these lows, but I don't think that's gonna happen. So we are okay. Nice rejection off the supply zone here. Remember, there is no two-leg here. Can't take this 3 minutes. Unless you wanted to count this as a two-leg, which is possible, but I don't want to force a trade. I'm okay. If you did, this is what your trade would look like. Almost a 4-pit stop. Yeah, see, I'm okay with not trading as well, Roman. I don't need to. As much as I would like to take a trade every single day and win every day, it's not possible. So if you wanted to, this could be a confirmed two-leg. Why? Because you have your inducement. Wrong one here. You have your inducement. You have your supply zone here. I don't know why I'm drawing with this thing. It is really convenient just to draw with that, not gonna lie. So then you have this supply zone here. And then you have your BOS here, confirmed. And then you have your one leg retest, two-leg pullback. Here's the thing though, it's hard to get in at this early. There is a supply on the 1 minute. Price could then grab liquidity. This is a nice two-leg. Huge gap in between. Small stop loss. Price is rejecting and then dumping. But once again, what is right here? This is the demand zone. This is a target rejection, like a price rejected. This could now flip into a decisional, which then could be a potential SMT because price, you think if price rejects this again, it's going to send it back up. But if price doesn't reject it and breaks through, it's confirmed decisional, which then we will use as a counter to keep pushing us to the downside. So we don't have to worry about this one. We have to worry about that. Okay. There is a little bit of a doji, so that means there is a little bit of structure right here. But at this point, I don't think it's going to be that strong. But yeah. Ultimately, this is not a trade that I'm willing to take, especially on a Monday. And honestly, our first trade of the week should not be a losing trade because that just sucks. So we're going to be very selective, very, very, very reserved, and very, very slow and steady when we take our first trade because we want it to be a winner. And also, where is my ruler? One thing I've also learned that price has, what is it? I think Roman, it's like a 15 to 20 pip move in during session, and then it pretty wears out pretty good. I think that's what it was, 15 or 20 pips there. And we're already at 13, so we're starting to market's starting to slow down. That's a pretty big move already for session. Here, Euro hasn't had much of a move yet. We've had a 7 pip move, so we still have some power left in here. But look at that. You can see structure is still building. Now we could see a 2-leg protocol out of this. Get rid of that SMT. You can see price. Well, I'm gonna actually put it back there. Yeah. Price is creating an inducement. All right. Price induced. Here's your BOS. Your supply zone is now going to be here, like this. Now we have a bunch of supply zones on top of each other. Now we could see a 1-leg. Right? 1-leg. But the thing is, price has to come all the way down here to create that second leg. Why? Because it created this big old wick. Like you're not going to take a trade because of a wick, that price has to break this wick and create the second BOS. It has to create the next structure point in order to take this trade. So ultimately, you would need that BOS to be down here. You're not going to take that. So we're actually just going to stop looking at Euro because it's dead. GU, pretty much dead as well. And gold. Yeah. You know, this is, I think we're not going to get a trade today. And I'm going to be completely honest with that. It's 8:30 and you can clearly see that this is consolidation, right? You can see prices not having any movement. It's not going up. It's not going down. It is strictly consolidating. Let's see what the higher time frames are saying. Yeah. Happy Monday. All right. All right. Let's practice. Let's look for, let's do a little practice here with you guys. We're going to look for our swing highs and our swing lows. Okay. I'm going to call on you and you're going to put in, we're going to go to our daily chart here. Maybe. If it loads. Rome says go to the 4 hour. I got all my 4 hour marked up already, so let's go to a different let's go to fxcm.com. This is from our back testing yesterday. Let's get rid of all this, okay? All right, guys. So this is new for everybody. So we're gonna see. Look at this. This is crazy. I remember trading gold back when it was freaking down here. Disgusting, yeah. The good old days. All right. So, all right, Dallas, this is for you. What mark is our swing high? I don't know why I did that. All right. Type in the best the best numbers that indicate a swing high and a swing low. So it could be 1 and 6, it could be 3 and 4, it could be 5 and 7, 2 and 5. Okay, beautiful. That is correct. That was a pretty easy one, I'm not gonna lie. Why is 5 and 2 and 5 the best swing high locations? Well, one, it's very clear. I'm just gonna point that out. Lowest with the highest swing. Yes, exactly. Beautifully said. So when we're looking for swing highs and swing lows, you're not really considering the higher highs and the higher lows because those are lower lows and the lower highs because those are all internals. When you're looking at the higher time frames, we're going to start marking out our swing highs and our swing lows because they're targets. We're not just going to mark out all of our higher highs and higher lows. Like if I wanted to, I could come in here and take, as Dallas knows, these are our blue balls, and these are internal higher highs and higher lows like that. So we could come in here and mark out our internals, right? But we're not going to mark these internals out on the higher time frames out because these are our higher time frame targets. These are internal higher highs and higher lows. These are our swing highs and swing lows. All right. Let's go. Let's go to another area and see if we can find another one. All right. This one is for Tommy. Okay, let's make it a little harder, huh? Okay. I want you to find a bullish swing low. Or swing, yeah, bullish. Same thing as Dallas. Okay. 4 and 7. Okay, I like that. And that is the first thing I thought too. But as you can see, look at this mega pullback. Okay. So ultimately, I would have gone with 4 and 5, but I would have kept. This is how I would have marked it. I would have taken my green ball here and my green ball here, and then I would have taken a red ball and just thrown it right there. And then I would have came over here and then thrown a green ball. Well, these are blue. These are supposed to be green. Okay. So 4 and 7, that is a great answer. Yes, I love that. That's great. We have to keep considering because this is a considerable pullback. This price went from 196 to 107 or 806. This is a hundred and something dollar move. That is a pretty considerable pullback. Now you're like, oh, what about this one here? Yeah, that's not as, look at the size of this pullback compared to this pullback. And you can see price then creates a bearish inducement. And that is one of the huge factors deciding, okay, is price bullish or bearish? You come in here and you can see price created this huge inducement, creating the shift of structure, came back, another inducement. Price is then considerably bearish, inducement, and then it flips. And then it flips again. So 3 inducements in a row, nice bearish push. Okay. It's a good target saying, okay, we're at now bearish. As you can see here, we have inducement, 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 right? Yeah, we have a little bit of a bearish pressure, but then it comes back in and induces again, pushes, comes back, inducement again, inducement again. This is an inducement there. As you can see, the inducements are not aggressive. There's many bearish pushers in here. Like this obviously switches bearish. This is an internal structure. So ultimately this could be your high and this could be your low, right? And then these are internal there, like that. That's your internals. So you could mark it like that, but I like to see a little bit more bearish pressure in there. Ultimately to target my swing highs and my swing lows. Does that make sense at all? A structure. Yep. Everything in between 4 and 7. This is all market structure. Yep. So if you counted 4 and 7 as your swing highs and your swing lows, this would be your internal structure. All this inside is all internal structure. Yep. All right. All right, Tony, you're up next. I want you to find bearish structure. Okay. Not bullish. We're going to find bearish structure here in a second. Let me clean these freaking charts up. I'm like an artist. All right, Tony, find your bearish structure. Roman, I'm going to find you the hardest one I can find. Gold is so whacked. Yeah, it is. Yes, Tony, that is perfect. Absolutely freaking perfect. Why would I count that? What's the difference between 1 and 4 and 4 and 7? Very few. There's a couple things. We do have this huge pullback here. And ultimately, I probably should have put a number there, but it never pushed above this structure here. So I probably should have put a 4 here, but huge bearish moving down. Yes. There you have the continuation, you have the consolidation, you have the continuation, we have the little bit of retest to grab liquidity, and then you have the continuation again. Right? Same thing with Tommy's perfect example with the 4 to 7. You have the bullish push, you have the consolidation, you have a little bit of retracement to grab the liquidation, and then you have the continuation again. Beautiful. You guys did it awesome. And then these are internal. These are internal high, low, and high here. So this is how you would mark it. You'd come up here, mark this, and then you would mark this, and then you would have your internal structure marked in here, like that. Perfect. Great job, guys. Great job. All right, Rowan, let's find you a doozy. No, this is so simple. It's hard to use gold because it's been straight up for the last year. Let's go lower time frames. How about that? More structure. Okay. All right. Well, this one's pretty freaking simple too, but we're gonna do it. Okay, so we have our 1, 2, 3, 4, 5. Okay, I'll zoom it in so you can see it a little better. All right, Roman, I want you to find me what numbers are my bearish and what numbers are my bullish. And what numbers are my internals. I want you to do the full thing, lay it out to me completely 1 to 5. What number is one? What number is two? What number, so on. Lay it all out. Everybody else should be doing the same thing as well while this is going on. Just let Roman answer first, and then you can throw your answers in to see it, or write it down to see if you can match what Roman is going to say. Yeah, so I want you to do, okay, yep, that is bearish. I want you to do every single number though. 4 to 5 is bullish. Yep. Oh, and then 1 and 2. 1 and 2 bears. Yep, exactly. So you have that right. Also, 2 and 3 are also internals for a higher time frame. We are on the 15. Yeah. 1 to 4 bearish. 1 to 4 bearish. Yep. I like it. 1 to 4. 2 to 3 internal. Beautiful, guys. There you go. 4 to 5. Tommy goes 1 to 4 bearish. 4 to 5 bullish. Yeah. 2 3 internal. Beautiful, guys. I love it. Awesome. 2 to 3 internal. 1 to 4 bearish. Beautiful. Beautiful. Great job. So exactly what you guys said. Our swing high. We are on the 15-minute time frame. We actually zoomed in. So normally we'd be looking at the 1 or 4 hour, but we took it and we zoomed it in and to get close into detail here. So ultimately, this would be a huge candlestick. This would be a 4 hour candlestick, would be an eternal swing or whatever this would be. So we have our swing high and our swing low because we have the bearish push. We have the consolidation, which is our internals, which then the continuation, right? And then we have an inducement right here. We have a bullish push. We have the retracement, retest, and then we have the continuation, which then pushes this to be bullish. That was freaking perfect, guys. You guys did amazing. Beautiful. Perfect, perfect, perfect. All right. Let's see if we can find. This is current price right there. Yeah. Wow, it's still pushing. 80. Let's look how. Let's go to the 1 minute really quick. No one wants to trade this freaking. This is dumb. It's an ugly market. Perfect. All right, let's find actually maybe an entry signal protocol. How about that? See if we can find our entry signal protocol. I'm just gonna go back to our natural chart. So we saw there. Actually, no, that's a bad idea. Then it gives it away. Bad idea. We're just gonna go to the 1 minute. And we're not gonna mark anything. You guys are strictly gonna have to look at the chart and see if this is a valid entry or not a valid entry. Even if it plays out or not, You know what I mean? Like I'm gonna throw a chart up there and I want you to tell me, is this a good entry or is this a bad entry? Strictly off of a 1 minute time frame. So this is going to test you by looking at your surroundings, finding your BOS, finding your inducement, finding your supply zone, and you're going to have to see, okay, would you enter this or is this just a bad trade? All right. First one here. Would you enter this trade? Yes or no? Okay. Two more answers. Fuck yes. Tommy, what are you thinking? Yes. Yes. Tommy and Roman. Correct. I would enter this trade as well. Why? Bearish momentum. We have a push, shift of structure, one leg, pull back, little bit, push, two leg, creation, came back, neckline retest, push. Yes. So Dallas, that's great. Beautiful, beautiful, beautiful. There you go. See, you guys know exactly what you're looking for. So, in your terms, you wouldn't have entered it. That's awesome. That's what we like to see. Dallas, I completely agree. I would have liked to see this pullback just a little bit more because then you and Tony would both have gotten the pullback, and then Tony would have also got his inverted head and shoulders, right? Boom. So you guys are not wrong. You guys are correct. You are all correct in your own way. That was perfect. Good. I like that. All right. I want to find a tricky one here. My bias is a little different. Exactly. Yep. All right. Here's another one. All right. What'd you get into this trade? Actually, answer. All right. There you go. What'd you get into that trade? Two yeses. Good job, Roman. Yep. Inverted head and shoulders, two leg. Yes. Great job, guys. Beautiful. Yep. I'll break it down quick. We have our BOS here. We have the push one leg, retest the BOS. Two leg came back, created a higher high, created a little bit of a nice gap, had a pullback, did not break structure, and then entry on that BOS retest with a valid supplies demand zone here with our valid inducement here, pushing to the upside. And then, yes, the head and shoulders retest, inverted head and shoulders, beautiful neckline retest. Yep. Boom, 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 push, and then wick down, grab liquidity. No can. Wow. No candle close. That sounded like that lightning struck was on top of me. No candle close down here, just a nice solid wick, which then retested the neckline here and then the continuation. Beautiful, guys. Great job. All right, let's find the next one. All right, what about this one right here? What do you get in that trade? One no so far. Come on, guys, it shouldn't take that long. Good job. Why? Because it's in Asia. Bam, that's why. We don't fucking trade out of session, guys. Shit. Bad news, high risk. There you go. Tony knows what's up. Good job, guys. Good job. Even if it was the most prettiest, perfect A plus plus plus, 10 out of 10 setup, I don't care. Stay away. Stay away. Stay away. All right. Hello, trick question. Yeah. All right. Yeah, Roman would have caught that 1 to 20 during Asia, though. Probably. He'd be sneaking those little sneaky ones in there. 100. 1 to 1 million. Let's see if I can find a nice another one for you. All right. Hmm. Okay. Here's a trick one for you guys. Would you get into this trade? Yes or no? If the opportunity is there, out of session, would you still take it though? Depends on you. Personally, I want to stick to session. Every once in a while, I will admit I do take an Asia trade. I do find a beautiful Asia session trade, and then I take it sometimes. It's a 50-50 shot during Asia. And that's all up to you. Tommy says, no idea. Roman says, yes. Yes. Yeah, Tony says. And yes, okay. Inducement before session. Beautiful. What else do you see? Retest. Yep. Also, we do have a two-leg protocol, but it's an Alabama two-leg protocol. Retest of imbalance in supply. Beautiful. Target on the bottom. Yep. Beautiful. This would be a little bit higher risk, but this would still be a valid setup. We have like I said, you guys said the inducement. We have the inducement here. We have the imbalance right here. So your inducement candle will be here. Your imbalance is about this big, and supply zone's that big, and the balance and the supply. Price then gave us a two-leg protocol, one leg, pull back, two leg. It then gave us the Alabama special, which then created the higher high, which would then either one, distract us and target us and push us away, or two, just make us a little bit more worried, just be okay, are we going to take this? Because we've seen this the last few weeks happen and play out multiple times, and we don't take it, and price then continues the continuation, the push, and goes into our favor without us. So there is the chance that this also produces that SMT, and that's why we always get a little scared of this, because there's that chance of an SMT in there. right? But ultimately, I have been noticing if price does not close above the first pullback, we should be okay. Even if it closes like this, but ultimately this is your swing high and this is your swing low, right? If price does not close above that middle higher high and higher low, or lower high and lower low, we should be okay. And I'm still in the back testing zone of this, but ultimately I do like this setup just from experience in the last couple of weeks with you guys. When we live trade, we've seen this setup. So we do have the inducement, we have the supply creation with the imbalance and balance. Remember, here's your supply. This is your imbalance from this wick to this wick. Imbalance and supply together is that big. All right, SMT potential here. Price is then not closed above. It did wick into it. So ultimately, we probably wouldn't have gotten into this until price then got down below there. But then our stop losses would have came in a little bit tighter anyways, and then we still would have gotten our 1 to 3 ultimately like that. It's beautiful. So yes, target at the bottom. So yes. Tommy, does that make sense? You said no idea on this. Does it kind of make sense now? You see the two leg, you see the supply, you see the imbalance with the inducement. Yeah, now so now it does. Yeah. And it's also different. One thing that I've learned with, my years of trading is you get really, really good at taking buys. And then when a sell setup comes up and looks at you in the face, it is confusing because why? It's upside down. It's the same setup as a buys, but you got to be able to look at it upside down. So sells and buys are the same setup, same everything. It's just it's upside down, it's backwards, it's confusing. And I still get a little confused coming into a sell setup every once in a while. I'm like, is that actually a setup? And then quick trick is to just hit this button wherever the invert your scale here, flips it upside down. And now it's like, okay, now I see it. Okay, BOS, one leg push right here, push. Okay, made equal highs, came back, retested the BOS, or even retested the BOS here, and then pushed. So now that scale's inverted, can you see the sell or the buy when prices? Whoa, I'm losing it. Yeah, now you can see it. Okay, so here's your BOS, or here's your BOS, one leg, two leg. Price did pull back a little deep into your SMT and then pushed. And then there is no inverted head and shoulders on this. So our head and shoulders. Wow. Same thing. It looks cleaner now. Now you can see the head and shoulders on here. Left head, right shoulder, entry on the right shoulder. Once again, left head, confirmed head and shoulders here. Pull back, entry on that right shoulder, then sell off like that. Beautiful. All right. No trades today, but we got a little bit of studying in, got a little practice in. Sometimes you just gotta do that when the markets have just been poopy.